Ladies and gentlemen, welcome to another Independent View with your host, Lobo Tigre. Our guest of the day is Peter Grandich, who I feel almost needs no introduction. He's the founder of Peter Grandich and Company, famous former Wall Street investor, famous in the metals and resource sector, and lately, uranium bug. So, Peter, I know that we have a connection on this front. Why don't you go ahead and tell us that uranium bug story, how you got in, and it's the topic of the day. I've got questions for you.
Sure. Well, first of all, it is truly, I said when you contacted me, I've done thousands of interviews, and you always say in a polite way, happy to be here and all that. But I'm actually happy to be here because it was an interview of yours late in 2019 that I took such notice to. I had never really, and even when I was deeply involved in the metals and mining industry, never really paid any attention to uranium. I was a gold and silver and copper base metal type guy. Both went on the management side and then the corporate consultant side. But it was that interview of yours and detailing, what had happened in the uranium market to the level it got to. And I don't know of anybody that was earlier and more appropriate to time than you were. So I listened to it a few times and I began to look into it, and I found and agreed wholeheartedly what you had stated. And by early 2020, I became, as you just said, a uranium bug. I really I put a ton of money into it. I no longer manage or responsible to other people, but the friends that want to listen to that I still share my thoughts with. I told them this, I think, can end up being the biggest bull market I ever participated in, and that it was developing a near perfect storm of what you hope to find in any commodity. And sure enough, we had an initial great run, and I did take profits, but
Good for you. I'm glad to hear that.
I kept some, really a core holding, which is Cameco. And then just a couple of weeks ago, I was ready to apply it all back in. In fact, I put out bids. I spoke about it. I needed one more down day. I got filled on a few bids, but then it turned and I think it's said goodbye to that. I think this is the run now. That'll be the earnest run. And people need to understand. And I'm certain you're followers do, because I've continued to watch your work, which, by the way, goes far surpassed uranium. You do a lot of good work in a lot of other areas. That's why I was so willing and happy to speak to you versus just a face like everybody else sees from your meeting. So I look forward to this discussion. You're right. I am a uranium bug, and I think the best is still yet to come.
Awesome overview, and thank you for that. And gee, there's so many things I want to say, but I want to rewind to something you said. You took profits. I think that is so important, and kudos to you. I did too, by the way. I got doubles and better on several of my uranium stocks, particularly last December, when the stock started going crazy, but the uranium price itself was going down. The underlying value case was worsening as that progressed. And I said, that doesn't mean I'm no longer a uranium bug. This doesn't mean I'm done with uranium. But objectively, the rational thing to do is to take a little money off the tables to be able to sleep at night. And people get angry. Oh, you're giving up too early. You're walking away from all this money. No, we're not abandoning uranium. We're locking in gains. It's a very different thing. Is that how you saw it?
Pretty much. I've lost enough money to be an expert on how to lose as much as it is how to win. And especially in the junior resource market, no matter what the commodity is, the gains don't seem to last forever. You seem to be always working from a defensive position. So when you have an opportunity of doubles or triples in a period of time, far less than you would be willing to wait for those double or triples, more times than not, it just pays, like you said, to take the profit. But now I think this run is going to be sustained. And I also think that all the things that you and I and a few others, hope people realize there haven't been a lot of bullish voices. Now, there are people that, just like there's always been in the gold market, that have always said gold and silver are going to the moon. They said it for 30 years, and like a broken clock, they'll be right twice a day. I don't believe I'm in that camp, nor do I believe, from what I've seen of your work the last 2 years, that you're in that camp. But this is the rocket ship kind of thing that we've hoped for is all coming together. The enormous amount of demand from the actual product, and the very limited ability for people to partake in that. This is an industry that if you take all the market cap, even at today's prices, of all the uranium plays that are out there, it's still minuscule to maybe half of a Dow stock. So it really is set up that it's nice to see, that old 18 thing when he used to say, it's nice to see a plan come together. Well, you see a lot of plans blow up in this business. It's nice to see a plan working out almost to the T that you thought it would.
All right, well, let's come back to the rocket ship. But one more thing from your intro. You mentioned backing up the truck to buy some more during the recent dip and not getting filled on everything, but I hope you did get some bids and offers filled. I did the same thing. And I've been getting a lot of kudos from people. Oh, this stock is up 20% since you recommended it a few days ago. How did you know? And I didn't know. I don't pretend to know the future. I don't know what uranium's going to do tomorrow. I have a feeling for where the trend is going. But objectively, we had an opportunity. We had a lot of bearish sentiment for whatever reason came into play a couple of weeks ago. So you had the stocks going down, the opposite of what I was talking about from last December. You had the stocks going down, even though uranium is having a good month. And I said, you know what? There's some great companies here that are on sale again. These are a better deal. And here's my prices. If the market comes to me on these prices, I want to buy. And it did on two of them. So, I didn't know the market was going to turn. I just saw a good deal on the table and I took it. Is that what you did, or why did you buy it recently?
Well, Louis, the first would be what you said. I saw finally the price start to take some real serious move to the upside, and the Sprott situation really, to me, I've been telling people, it's going to be the watershed effect that's going to turn around the spot price, which so many people were focusing on almost intraday too much. The second was I began to watch on Twitter yourself and some others who have demonstrated a real love and understanding of uranium far more than I had. And I was watching that a lot of their people who were following them were turning bearish. And I said, this is actually the time that you would want to step up and add. And so like I tried, I put in bids. I wouldn't call them stink bids. They weren't that low from the market, but I wanted to buy it thinking that, especially if the general equity market was going to turn down, that would impact these things in the very short term. But like I said, it came with, a couple got filled, but not anywhere near that I looked at. But I already still maintained and I don't want to take away from where you wanted to go in this interview, but I never sold a share of my Cameco. I had the same amount when I backed it up when it was down at $8 a share, because my argument has always been, and that is, and this is unbelievable because you never see this in another commodity. I can literally use one hand to count the public companies that people can purchase that actually sell the commodity, develop it and sell it to the end users. And therefore, my argument always is if we're going to believe in 60 or 70 or $80 uranium price again, how the heck does Cameco not make a lot of money in that? And they're also, what kept me holding it is extremely well-run management. I mean, you just have to follow their conference calls and listen to them and understand the depth of knowledge and intelligence they have to warrant that. So yeah, it was a combination of things, but the barn door is open now. This is what we've all waited for. And the tough thing will be is not to sell too early, that you wait for such dynamics and then suddenly, because it's gone up 40% in a week when you would have been happy if that was 6 months, you get out. This run, I think, is long lasting. And like I said, probably not until we start hearing from people we never hear from who are now telling you to first buy uranium stuff. That'll probably be our first signal that maybe it's getting long in the tooth. But we're so far away from that, I don't see that anywhere near the horizon.
Yeah, that's a good point to drill in on, because I'm sure there's going to be people out there that are seeing the price going up. You look at the near-term chart and the uranium price looks almost vertical right now. But you pull back, and that's actually part of a channel of 2 steps forward, 2 steps back. And so the point I want to make and get your response to is, for anybody out there that's thinking, oh, it's too late, these stocks are up, uranium's up. No, it's far, far from too late. In the first place, very, very few companies, you've mentioned one, can make money at these prices. The uranium price still has to go way up from where it is, pretty much double almost, for the industry as a whole to be solvent and growing and healthy. And uranium still is irreplaceable. I mean, someday in the future, it may be replaced, but right now it's irreplaceable. And the industry is insolvent at current prices. So unlike other commodities where it's legitimate to ask, well, gee, how much more upside is there in copper or something like that? I still think there is, but it's legitimate to ask. Whereas uranium, we're still way below the average cost of production. So there's still, I think, for anybody who's wondering, have I missed the boat? My answer is no. What's your take on that?
I wholeheartedly agree. And unlike other commodities where you could almost overnight go in and start producing it, uranium is extra because of all the concerns people have, the permitting, the environmental, all of that type of stuff. And let's face facts. If you think there's been a lack of exploration in base metals or precious metals the last 10 years, the amount of money that's gone into go looking for new uranium deposits is nil. I mean, there's been some people that have worked on it and stayed with it, but there's really been no fresh money. And one of the arguments that I've had, and I'd be curious to hear, and I don't want to step out of how you want to go this way, but one of the thoughts I had, Lewis, is that there's going to be another Sprott. Somebody's going to come along and realize, hey, wait a minute. If we can raise several $100 million here and start buying this uranium, we can, in a sense, fulfill our own destiny, because it would just cause even more of an arch up in price. So one of the surprises that won't surprise me is to suddenly learn that there's another group out there going out and actually buying physical uranium, and that just cascades into a whole bunch of bullish stuff and all. And believe it or not, if you follow the chemicals of the world, this is kind of tracing out what they expected in the way that they took their company, and they took some pain at this point because they felt it would lead to dramatic, much better prices down the road. And so far it appears that that's working in their way. So I think, like I said, you're not going to buy them so-called at cheap lowest end, but doubles and triples, because what happens in these things is, if you can imagine, right now, there's still no one really focused on the institutional side or even the retail mem type players. Uranium isn't on their radar yet. Now, this type of run and technically some talk will lead to it. Can you imagine just a little bit of that money tries to get into these things with the same fundamentals happening at the same time? Those are the fantasy dreams that maybe we, as we put our head in our pillows and already said our prayers, one of the last conscious things we think of is, uranium at 60, 80, or 100. But it is possible. And I'm in the advanced stage of the twilight of my career. I've been at this 38 years, and I've told people, I said, I've not seen dynamics come together like this and still be able to participate in. Normally it happens, and then you're one of the ladders. You may not be the earliest, you may not be the first one at the stadium, but they're only saying play ball right now. So you still have a whole game in front of you.
That's a good metaphor. Actually, I want to go back to something you said earlier about the Sprott thing, because we get a lot of questions about this. And I have to say, it's not that I poo-pooed the Sprott thing or dismissed it. I understood the significance, and I thought it was, or generally understood the significance. I thought it was a positive thing, but I saw it as an optional tailwind. I'm a fundamental investor, and the fundamentals that you and I have just been discussing about the average cost of production, the cost today, the incentive cost, that this is something necessary. It's not like we can do without this, maybe 30 years from now, but not now. That's what really drove my decision making. If on top of this, Sprott or anybody else comes in and helps create more buying in the market, great. But we don't need that. So I was kind of, let's wait and see. Just because they announced 360 million at an ATM, that doesn't mean the market's going to give them 360 million. Let's wait and see. But you seem to have been much more enthusiastic before the fact. What led you to that optimism before the Sprott thing actually went and showed that it could move things?
The good news in what you just said, Lewis, is you're one of the last of the Mohicans. You actually consider and take in-depth fundamental analysis. Unfortunately, both the professional and individual investor community, some of whom were just a couple of years ago, their biggest problem was solving it in an algebra class, and now they're full-fledged investment experts. The market has become a place where it's surface. It just give me a little bit of something. In-depth analysis, fundamental. Look, when I entered the business, and I'm maybe a little bit older than you, but you could probably still recall when you read a research report and it had a 3 to 5 year outlook. Now it's 3 to 5 minutes. I mean, long term has certainly shrunk in the size. And so I felt that what we needed was, since everybody's focused on the spot price, not recognizing that, as you did, that the fundamentals are going to change here regardless. Okay. Eventually that spot price was going to go way, way up because of what was happening. But to get the fast or the hot money to really, in a sense, light the rocket ship, we needed something. And I felt the Sprott thing was it. But I also think, just as when the Hunts thought of cornering the silver market, the people are going to recognize institutionally, and I've heard that discussion from others, hey, that maybe this Sprott formula is a good way of making money, irregardless of the depth that you and I take the uranium to. Just the fact that, hey, more money chasing limited supply can only chase it up higher, and then those companies that we have invested in benefited because the underlying product that we sell or look for goes up a lot in price. So that's really the way that I looked at it.
That's, the flavor of the day phenomenon is certainly very strong in the resource sector. You see one good thing happen, Newfoundland, there's a great gold discovery, and suddenly everybody and their cousin is suddenly a Newfoundland gold exploration play. Money just chases after these flavors of the day. So if this becomes the flavor of the day and people are like, holy cow, look at what's going on over here, I can see the pylon. I'm just going to bow to your experience, because I didn't see it in advance. I thought it was interesting. I thought it could help, but I did not really see that being the flavor of the day spark. So kudos to you for spotting that. The other thing, though, I've had questions from clients is like, well, but what if it goes into reverse? What if they buy, and then it quiets down? What if there is no flavor of the day, and then Sprott stops buying, and then the spot price goes down again? Could this all be a flash in the pan? Any response to that?
You supposedly you can get in a car and you can get, be in an accident. You could be out somewhere, get hit by lightning. But those, right now, the way the fundamentals set up for the uranium market, the only two things, and one of them has always been overplayed. There's only two negatives possibly to this scenario. The one that gets overplayed is, oh my God, a nuclear accident. And we've had them, but we have to remember there's only been one that actually happened and death occurred because of the actual accident. The rest was unfortunate things unrelated to it. For instance, in Japan, the nuclear plant going off didn't kill anybody, but the fact that they decided to build it right by an ocean, is what hurt a lot of people. So there's always that. You can't take that off the table. That's always, a possibility. But like I said, I think we get more chance of going out and driving in a car than an accident. The other is a tremendous swoon in the general equity markets. There's just no way that if for whatever reason, the Dow Jones Industrial Average between now and year end decides to lose 30 or 40%, that the uranium stocks just keep rising. Now, they'll probably go down somewhat in affected by it, but their fundamentals that we've begun to discuss will turn them faster than, say, some of the things that have, excess, the technologies, the cryptocurrencies, things where it just, they're up 3,000, 4,000%. There's so much air in between where they're at and where they started that, they're going to hit, an air pocket and come down and stay down for a while. So those are the only two things that I see that could stop this, once in a lifetime uranium bull market, in my view.
I quite agree. So my answer to the worry warts is, okay, yeah, it could happen. Sprott stops buying and the market goes back to how it was. Well, how it was is a 5-year uptrend with higher highs and higher lows over the last 5 years. So I'm fine with that. If it goes back to that, it'll create more buying opportunities. But the 2 points you brought up, I think, are really important. Sorry, go ahead.
I'm sorry, Lou. The other point I think that's really critical is to put on our just fundamental hats for a moment. Let's understand that a lot of the utility companies around the world, but here particularly in North America, from what we're told, are at the latter stages of their long-term commitments or already out of them. And so it's not like, hey, these guys are fat. They got their contract for the next 10, 15 years. They don't have to sweat if it goes from 30 to 60 or sweat that they're actually going to get supply. No, they've been sitting back because it didn't look like there was any need to rush. I think the dynamics that are happening in the market now are changing those fundamentals to them. And that was what Cameco kind of played and shot their dice with, that was going to happen. And therefore they wanted to have ample supply and not sell a lot of their own good stuff out of inventory and not have it anymore. And while that's yet to be seen, it would not surprise me as the next couple of quarters, the producers of the world, and like we both agree, there's not many of them, are going to start talking about, wow, we got a lot more long-term contract commitments happening, and that'll just add to the, to the fire as well. And also, I think that was another critical point that I wanted to make sure that we got out here.
Sure, I'm glad you added that, and I quite agree. A key part of that is that it's not just about price. If you're a power utility, you need a secure supply for long-term. You need to know that you can count on your supply. So it's not just about, getting the few pennies cheaper on the spot market or dollars even. It's about knowing that you're going to have your fuel when you need it for years to come. And so as the old long-term contracts go away, it's not optional. You need new long-term contracts. And the miners are not going to sign them anywhere near current prices. So I think that absent not the Wall Street thing, but absent the nuclear accident point that you mentioned, I think that's as close to a sure thing as we can see in investing. The miners are not going to sign at these prices.
You're absolutely right, Lou. The change in price won't affect the utility's decision. They're focused on, you're right, the certainty of having the supply. It doesn't really change it a lot for them whether they pay 35 or 70, unlike other things where it's just, oh my God, we go bankrupt paying this price. No, the certainty of the supply is critical to them. And they've been lax in that. Now they'll just say, hey, listen, let's not play around. Let's make sure we have our commitment. So that's what I expect to hear from the Camegos of the world over the next few quarters, that their long-term commitment contracts are really increasing and utilities are now knocking on their door.
Likewise, but I don't want to brush over the nuclear accident thing. I agree that, the odds of having an auto accident are greater. And it was Chernobyl was the one that really killed people with the nuclear accident, whereas it was the tsunami that killed people in Japan. Of course, there are effects, but it was a natural disaster. I understand that. But I do think it's worth pausing a moment and thinking about this. This is why I call my uranium stocks the high risk end of my portfolio. Because if, heaven forbid, there is another major accident, and it is a nuclear accident, and it kills people, obviously, not just sentiment. I mean, uranium prices will tank, the stocks will tank. A major loss of capital is possible here if one of these very rare events were to occur. And I just don't think it's responsible to brush that under the rug or just say, yeah, it's unlikely. I think people should know that. They should only buy understanding that this isn't like buying Coca-Cola or something that might have a bad quarter. This is something where you're swinging for the bleachers. 10 baggers are possible in this space. But with that comes the risk of a major loss of capital if one of these things happens. And that ties into what you said earlier, that we agreed about taking profits. That being the case, even though I'm super bullish on uranium, that in my mind just reinforces the reason for taking profits as we go. That doesn't mean selling or getting out early. That means locking in gains. Is that how you see it, Peter?
Well, for instance, I've shared already with my Cameco purchase, which was, basically averaged down at 8 or 9. I've talked about a target of 25, and I've told people already that I'm almost certain, and things can change, that I'm going to take out my original investment if I'm so blessed that that price gets up to that level. So you're right. You can't push it aside. It is always a dynamic, and if it happens just terribly. There's no middle of the road. If there's an accident, you're right. Everything just goes bad. But again, taking profits and cutting potential losses of principal is the key. And that goes back to an old thing that I talk about everything. And that is, and it was given to me by an old newsletter writer, long gone, named Kennedy Grandich, who used to say, it's not how much you make, but how much you prevent yourself from losing, which will separate you from the winners versus the losers. And in this industry, you're right. If you could take profits and cut your losses and take out that fear of that dynamic of a horrendous accident causing such widespread losses, you're doing the right thing.
All right. I'll just quickly mention for the audience out there, my way of doing this is I have a strategy I call the upside maximizer. It's my refinement on Doug Casey's old sell half on the first double. People think taking profits, well, you're selling too early. No, I'm not selling. I'm not exiting. What I do is I use a trailing stop loss type calculation, but not to stop losses. I use it as the price keeps going up. And I let it run. I don't sell half on the first double. I let it run. I let it run. As long as it keeps going up, I let it run. When it turns significantly, then I'll take some money off the table. That doesn't mean exiting. That means making sure the wind doesn't slip through my finger. That report is available for free on the website. Look up Upside Maximizer. Sorry, quick little plug there, Peter. But I think we're on the same page. The other thing you mentioned, though, was the stock market meltdown. And just given how jittery the markets have been, and any mention of the taper, I mean, this last week, it was surprising how little market reaction there was to Powell actually saying, yes, we're going to have to taper. But he was so uber dovish on everything else. And we're not even, he didn't say not thinking about thinking, but he almost said that about raising interest rates. So there was all this dovish stuff at the same time. And he didn't actually say, we will, and this is when. So my perception is that the markets they all know they're skating on thin ice. And the rush for the exits will be crazy whenever anybody thinks or the perception gets out there that things are going to go south. And so I think a major market downturn, whether it's a crash or not, or just a really big correction, I think that's card is, I don't know where it is on the deck, but it's pretty close to the top. It's in there. I think that's a possibility ahead. And yes, that would whack uranium stocks. Uranium stocks are stocks. The stock market goes down, uranium stocks go down. But here's the thing, is the kind of fundamentals you and I are talking about. It's not like uranium itself is overpriced. It's uranium is still underpriced. You can't mine the stuff, or almost nobody can mine the stuff at current prices, and it's necessary. So unlike overpriced market darlings, you have an underpriced sector that could go even more on sale at a time where the fundamentals say the price and the value proposition should increase. So my view is should we be so lucky as to get this market crash or correction that you and I fear may be imminent, or not imminent, but that there may be one soon. If that happens, I see that as a terrific buying opportunity, especially for anybody new to the space. Is that how you see it?
Well, for myself, and that's all I focus on, and I share with people what I'm doing, it has been my argument to get before year's end into a cash position that would equal or surpass my general ownership of all other type of stocks. That was already being worked on, and what I was going to use when I put in those bids on the uranium stocks that I wasn't able to buy. There's no question that I don't think you have to be a rocket scientist to say that we're in a bubble. I happen to think it's the biggest bubble of all time. And bubbles tend to run farther and higher than even one could imagine. And no one really identifies it as a true bubble until after it bursts, and then you can see the other side. But there's no question that when you look around at other types of sectors that make up the market, you're hard pressed to find something as you just described, an industry or a product or service that still at this date, you can't make money on it. So many other things are so overpriced, doesn't mean they can't continue. I would have, if I had to bet anything, I would have been short thousands of points lower because the market already looked like it was overpriced. Thankfully, I didn't, even though I wanted to. But I instead tried to focus on areas where like I said earlier, where I didn't think there was a serious loss of principal. Uranium was one, gold, silver, even copper at one period was another. But like you said, you can see the uranium stocks come down if there is a big swoon in the market. But like I said, I don't expect them to stay down like others will, because the overall fundamental story is still bullish. But here's the thing. There's still 98% of the general public that has no idea about the uranium story. I mean, they've heard a little bit about the electrification, and they're hearing about, ESG and that stuff, but there's really been no one in mainstream, or what you would call, that make up the don't worry, be happy crowd, the people you see on the financial networks all the time. They haven't even begun to look at uranium, and they eventually will, because they'll eventually see what we're seeing. And when they start talking, then all their sheep and all kind of follow in, And that's going to be the time when you and I, the folks who got in early, are going to have to say, whoa, these guys are never early. I mean, they get to participate, but they're always at the middle or the latter stage or something. That's when people always, the biggest complaint people always had, Lou, you probably heard this through your career as well, is, hey, you guys always tell us when to buy. You never tell us when to sell. And my answer is always simple. I always say, listen, forget where you've been. Could you take the money you have in it now and first buy them today? And you ask people that now about technology stocks or even cryptocurrency, and they pause. Oh, wow, I'm up 3,000%. You ask somebody uranium, no one's sweating that. They're not. That's why I still think it's attractive. And until we get to that point where I go, wait a minute, I don't know if I could buy Cameco at 42 right now. We're not at that in the uranium market. So that's why I still feel there's a long way to go on the upside.
All right. Another sort of contra question that I get from time to time, and I have my answer, but I want to hear your answer to this is, okay, but there's the Delta variant, or maybe now there's the new variant. What if the economy really does slow down? Demand for energy goes down. Uranium is energy. Maybe energy is bearish next year or two, and therefore uranium stocks will go down. You're shaking your head, so I know you've got an answer. What do you tell those people?
Again, those are the possibilities. It's the percentage of those possibilities impacting is what will make you decide whether or not you should be in this. I would have a very minimal concern about that, even though I'm not saying we shouldn't be concerned about COVID or all the things that are happening geopolitical. But unless you believe in a total just annihilation or just the end of the world as we know it, at least, or knew it at least, the fact remains is where people are going. Everybody's talking about electrification of a car, electrification of a plane, electrification of this and that. It can't be solved simply by putting up more solar or more wind, nuclear energy and uranium are going to be a significant part of that, if you believe it's going to that. And everybody,
it could be solved with more coal plants, but who wants that?
Well, so that's where we're at now. Can it change? Yeah, you're right. And there's no certainty in these things. But like I said from the beginning, those things are so minuscule compared to the enormous upside that still is presented in this situation. And we know that simply because even though you and I will have this and you'll share this with your readers and I'll share this with mine, go out and look at 99% of the other things being discussed in the investment world, and it's not what we're discussing. It's when you start seeing what we're discussing here and there and everywhere, then we're in the latter stages, but we're not even close to that. I would have never been involved. I would have never been involved if it wasn't for you. So let me make sure I get that across to me, because I don't. It was not, and that's a perfect example. And this is another thing that I'm certain you realize, and it's good to tell people. You have to be open-minded in this thing. You can't be closed-minded. I could have taken the thing, that uranium. I used to hear a certain person, we won't mention, that had a relationship with Sprott, talk about uranium for 2 decades, and it never went anywhere, maybe once. And I could have went and said, that guy I used to listen to that. What does he know? Hey, wait a minute, this guy's presented some very serious fundamental analysis here. Hey, let's look into this. So we have to be open-minded. And you're clearly open-minded. You're not talking, uranium can't miss, get in all you can. The train is pulling out of the station, all the other things. And that's the other thing that I'll say is, folks, there's no boats. If it sails, let it sail without you. It's a ferry. If one goes out, something else is going to come in that you can get on board. But here in uranium, this is a unique situation.
You're singing my song. I always tell my audience, don't chase stocks, don't chase stocks. Or as Doug Casey always said, you can't kiss all the girls. And there's always another one you can ask to dance next time. But I do want to say on this energy demand question that there's a big difference between discretionary spending, prices going up or people getting worried and deciding not to drive out to grandma's this summer or next summer. That's different from wanting your lights to turn on at night. That's different from wanting electricity from a hospital. So base load energy, which uranium excels at, nuclear power excels at, It's that sweet spot that I think makes nuclear power and therefore uranium more insulated from potential broader economic downturns, so I think it's a mistake to just lump uranium in with all other energy commodities. I mean, initially, yes, a downturn in energy would affect it, but I think then reality asserts itself to uranium's advantage. But I had an inverse thought about this market crash question. What if there's a market meltdown? And I don't know about you, but I had a thought that, I just can't bring myself to buy these FANG market darlings that are already at nosebleed valuations. And yes, if there's a market meltdown, they could go up even higher. But if I bought them now, knowing that they're overvalued, and then they went back towards their intrinsic value, I'd feel like such a fool. I couldn't forgive myself for chasing a stock, as we just said not to do. But the uranium stocks, as we were just saying, they get whacked with Wall Street because they're stocks. That actually means they rally with Wall Street as well. I have seen, at least over the recent years, plenty of times where the uranium stocks were up on days where uranium itself was down. Why? Because all stocks were up. The three major US indices were up. And so uranium stocks went up with them. So there's a potential here to ride a Wall Street melt up, an even bigger melt up ahead, more stimmy checks, more money, more easy policy, whatever. Wall Street takes off again. Then uranium stocks could be a way to play that without buying overpriced market darlings. So I kind of like this as a way to hedge my bets a bit, participate possibly on another Wall Street insane rally without joining the insane club. How does that seem to you?
Well, I believe we already are in the melt up, up 100% in a year. Before the last year or two, that would have been considered a melt up in any time in my 38-year career. And we're watching things going up even more percentage-wise than that. I wouldn't want to buy the uranium stocks because the general market was going up. I would want to buy them for the reasons we discussed, that the general fundamentals demand that they be bought irregardless of whether or not the overall market would move it up. Yeah, it would help. It'd certainly be better going up than down if you want uranium stocks to go up. But necessarily, we may not either have a melt up or a melt down. This market is more likely to eventually roll over, meaning that it'll eventually stop going up as it's gone. And maybe it does have eventually some 10 or 20% decline in it. That may take us to, and I don't even know if you wanted to discuss this, but the Federal Reserve has painted itself in the corner. It is literally, and I don't think I'm the first. I don't know if I've heard this from somebody or I started using it on my own. I've called it monetary heroin. And today I even used from an old movie that Frank Sinatra was in, where he's an addict and he thinks just one more shot and then I'll take care of this problem I have. And that's realistically where Wall Street has come to it. It's become totally dependent on an artificial source in order to continue the game moving forward. Let's face facts. If we gone from 10 trillion in debt when the last financial crisis hit to over 30 trillion now. And so we have the Federal Reserve buying anywhere from 25%, sometimes some of the auctions, 50% of all the bonds in order that are floated to just keep life sustaining, to keep the, we're at a $3 trillion deficit now, budget deficit. And so how anybody expects them to stop all the purchasing and actually get into an interest rate rising mode. And even if that was to occur, which would be only unwillingly, that's not something they want to do, how that could be sustained when the fact that if you want to talk about interest rates going back to some normalcy, say 4 or 5%, that would be like 1.5 trillion in interest, Lewis, we would own on the debt we owe. We only did 3 trillion in 2019 in revenue, and that was the best year the government ever had. So I this tapering and all this type of stuff, I think the moment it appears to the don't worry, be happy crowd on Wall Street that the Fed is not going to be the king pusher, the markets will sell off. And then I think the Fed caves again and says, wait a minute, we can't live with a crash in the market or what have you and all. But even then it could become a snowball effect. But I don't think there's actually going to be just one day that we crash. I think this market's going to roll over. And that's why I want to have cash going into 2022, 23, because whether or not it does and we buy more uranium stocks because they hit, or other things that have just been way out of line finally fall back, to more valuations. Like I said, I just couldn't, like you, I just couldn't step in here and start a general equity portfolio. And worse, and this is something I never imagined, the Federal Reserve killed the fixed income market. Now, I've worked for a lot of years, and that's really what last I do. I work in a planning group that helps with retirement and business planning and all. And there was always a segment that if you didn't want to so-called risk your money in the stock market, you can come over here to the fixed income market and make more than inflation. That way you can stay ahead and keep your lifestyle, what have you. So inflation was 5%, bonds were 7%. Inflation was 8%, bonds were 10%. Inflation was 2%, bonds were 4%. Now you buy paper at 1% and inflation's 5%. It's an amazing thing that people would even put a nickel into a new bond at this point in time when inflation is 4 or 5 times higher than the current interest that they're paying you. But what it's also done, Lou, it's killed retirement planning. It's made it to where you have to take actual risk of principal in order to hopefully try to sustain some lifestyle someone's either grown accustomed to or wishes to have. And it's all riding on where loss of principal is possible. And that was not the case 10 or 20 years ago when you did, things like retirement planning and all. So this is a very, unique situation never before presented in modern history at a time when, the social and political aspect in the United States, at least, has never been more divided. I think outside of the Civil War, Lewis, I don't think the country's been more divided. There is no more middle class and there is no more middle opinion. You're either left or right. And
yeah, that is scary. That is seriously scary.
And let me just add one more thing, Lou, I'm sorry. If we have another crisis, in 2008, the Democrats and Republicans were able to go in a room, and it wasn't a great outcome that they came with, but they were able to come up with something to kind of stop the crisis. I don't think that happens now. I don't know how Republicans and Democrats that have such hatred and animosity to each other at this point in time could go in a room now and try to solve another financial crisis. And that's the difference between now and 2008. So I really hope there isn't a total meltdown, because it's not going to be able to be fixed this time as it was in previous times.
Scary thoughts. There's so many things I could go into there, Peter, but I do have another interview to get ready for, so I'm going to wrap up here. And I thought maybe just close on, I wanted to talk to you about uranium because we're fellow uranium bugs and the price is going vertical. It just seemed timely. We agree that we're not going to buy FANG stocks at these valuations. So just on the last word, though, for people that most of our audiences are more than just uranium bugs, what else do you like? If you could briefly just say, what else is on Peter Grandich's radar screen right now?
Sure. I still believe gold and silver, and it goes back to my thesis that I said earlier, that the key to investing is protecting your downside. I think there's far less risk of losing a lot of my money buying gold and silver now than the FANG stocks or cryptocurrencies and things of that nature. So I still focus in the gold and silver markets. There's some individual stocks I own. We discussed the best, and that's the uranium. Now I think that has the most upside. But realistically, it's very difficult to find anything else worth making a big bet on. That's why I want to make sure in the coming weeks and months that cash, not because I believe the dollar is worthy or, earning 1/10 of 1% on your money is a good thing, but I think things are going to be 20, 30, 40, maybe 50% cheaper in the next year or two overall. And I'm going to want to have money to purchase it at that time. So gold, silver, uranium, I still think are places that people can focus on. And, you spend a lot of time, I'm certain your viewers have their own ideas and you have your ideas in that market. But overall, I feel much safer there than going out now and buying, one of the meme stocks or even some of the, and let me just add this so people don't send a bunch of negative emails. I'm not against the cryptocurrency market. Like the internet in the early days, there'll be a dramatic sell-off eventually. Some will be shaken out, but out of that will be born true blockchain technology companies that are here to stay and make a lot of money. My just feeling is if you haven't been in by this time, a good part of the money's been made there, and it's been aided by the melt up in the stock market. So if you believe the stock market, and a lot of those people say, well, you should own those things because the market's going to melt down. Well, I think they're in for a rude awakening. If the market melts down, a lot of the money that's propped up a lot of the cryptocurrencies is going to come out of that as well. So I think that market is too mature, but on a dramatic pullback, there'll come some opportunities there as well. That should stop most of the negative emails.
well, unless they wrote us off as old, what do they call us? Boomers.
I get worse than that.
Too old to understand.
I get worse than that. I'm a little bit older than you, and I get called worse than that, but that's okay.
Okay, Peter. Well, thank you so much for that last insight, all of your insights. Great conversation. I look forward to doing this again sometime. Thank you.
Well, it was an honor to finally talk to the man that really helped me get in the uranium market. So thank you very much, and God bless.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.